Hi there, I'm Irk, and this is my channel, Get Irked. In this episode, can an ETF help you support green energy while also earning you green for your portfolio? In this episode, we're going to talk about getting exposure to the green energy space. Green energy, also known as clean energy, focuses on renewable energy. Think wind, solar, even water farms that are based in the oceans. And while you've probably seen news stories lately about how this is where the global environment wants to go, we're not really there yet. In fact, we're not even close. Since this is going to be a good theme into the future when it comes to long-term investing, you might be tempted to get exposure to the clean energy space. However, since it is so new, it's hard to know which of the companies out there are the best in breed and which ones are going to lead us into this future. When it comes to sectors like this, when you're talking about a new and rising industry, it is really hard to determine who the leader is. It's not unusual for upcoming themes to have what looks like the best in breed fail completely due to something like financial constraints or just a mistake in development. Because of this, I would rather have exposure to the clean energy space through an ETF or an exchange traded fund that makes up a basket of a whole bunch of different companies rather than choose one specific company and have it fail on me. For me, ETFs provide exposure to sectors that I don't want to do the research on to find a specific company, but I do want investment exposure to that sector. Sure, my upside might be limited because I'm not fully into the leader in the space. My downside is also limited because if any of them go bankrupt, I'm not fully exposed to that. The ETF evens it out. My ETF of choice for the clean energy sector is the iShares Global Clean Energy ETF with the ticker symbol ICLN, which is also iClean. In this video, we're going to go over the fundamentals of the ETF as well as a breakdown of its holdings. I'll give you a buying plan of what I would do if I didn't currently hold shares in the ETF, and then I'll go over my own position and show you where I've come from and where I plan to go from here. Before investing in any ETF, it's important to review the holdings of the ETF and know things like what the fees are. In order to do this, I go directly to the provider themselves, and in this case, that's iShares. You can see that the iShares website gives you a full rundown, including an overview of the ETF, as well as performance and distributions, and one of the most important parts, its holdings. And if you want to review any of the research from this video yourself, the links are in the show notes. Reviewing the holdings of an ETF will give you a list of the different individual stocks that make up the ETF in terms of the composition that they make up. For example, as you can see here, Enphase Energy makes up 8.11% of the overall ETF, followed closely by Vestas Wind Systems, which makes up 7.63%, followed by Consolidated Edison that makes up 6.43%, and as you work your way down, you can also see it has popular stocks like Plug Power in it. Plug Power makes up an excellent example of why you'd want to use an ETF instead of buying a specific stock. I held Plug in my speculation and play portfolio, and in March of 2021, news broke that there were financial irregularities in many of their earnings reports from the past. For me, I follow Jim Cramer's advice when it comes to any of my assets. When you hear about financial irregularities, your first reaction is to sell your stock entirely. Do not wait for the smoke to clear. And in this particular case, that ended up being the right decision. Plug did end up clearing those financial irregularities, but even still, it's been months and months, and Plug is nowhere near the highs where it was when I sold when those irregularities were still found, which is another reason why you might not want specific company risk when it comes to a new sector. It looked like Plug could be the winner, and then it got smacked down hard. Is it possible that Plug could still turn around and become best in breed in the space? Absolutely. But if you own the iClean ETF, you have exposure to Plug without worrying about whether or not it will or will not be the leader into the future. One of the other great things about the iClean ETF is it does have a dividend. Now, the yield isn't spectacular at 0.74% annually, but that's a lot better than a lot of the other specialty ETFs that do not carry a dividend yield at all. From here, let's take a look at iClean on a chart and develop a buying plan. Let's start by drawing a Fibonacci retracement from iClean's pandemic low to its high of 2021 so we can develop levels. You can see that iClean has pulled back pretty significantly from its all-time high, dropping now to its recent low down here, which is about 47.81% less than its all-time high. So now might be a good time to start a position in the ETF. From here, I'd look at where there was support in the past, and I'd probably start on the low of this day here around $17.92, or even round that that up to $18 if you really wanted a position. And since the ETF has sold off so much from its high, I would start with a 50% allocation, saving the remaining 50% for 5 individual buys, 10% each, as the ETF continues to sell off. From here, I'd take a look into the past to find levels where I'd add to the stock, and you could see that down here, around $15.33 was an area of past support of significance. Of course, if you wanted to be a little bit more aggressive, you could use the open of this day here at $15.74 as your next buy. And since I typically err on the side of being more aggressive, I would use that as my next buy. From here, you can take a look at the 78.6% retracement at $13.68. And when you look in the past, you can see that it's regularly pulled below that. So I'd probably use the open of this day here at $13.40 as my next buy. After that, we zoom out a little bit to get some more price action, and you can see we have a significant pull down here to $12 even, followed by another pullback here during the pandemic sell-off, and I probably use this day here at $9.46, and then the pandemic bottom of $8.08. However, when it does come to this ETF, I find it very unlikely that we'll ever see lows like that, since we've seen a lot of transition from fossil fuels to renewable energy in the past 2 years since the pandemic low. One of the reasons I really like ETFs is that the company-specific news isn't as scary as it can be if you actually own shares in a specific company. In other words, if news broke that clean energy sectors were going to see a decline or governments were going to spend less money, yeah, the clean energy ETF would sell off, but that gives you a buying opportunity to buy at lower levels. I know it can be really challenging for most investors to be able to see a stock sell off or an ETF sell off because it means they're down in the position. But for me, since I have a really long time horizon of 20 years, I'm a bit of a freak and I actually get excited when I see a market-wide sell-off. Market-wide sell-offs mean that you can buy your assets with impunity because it's pretty likely that they're all being treated equally because of a market-wide news story and not a stock-specific or sector-specific news story. From here, let's take a look at my own position in iClean. I'll show you where I've come from and where I plan to go from here. I opened my position in iClean on May 28th of 2021 with an initial buy at $22.96. After that, I did let iClean go for a little while because I bought a pretty sizable proportion. I'm pretty sure I started around 30%. I didn't use a 50% allocation since we didn't really have a whole lot of price action of where it might go. I wanted to protect myself against potential downside risk. When the ETF held up pretty well for the next 4 months, I decided to add to the position during the market-wide sell-off in September with a buy on the 20th at $21.90, which lowered my per-share cost to $22.65, a reduction of 1.35%. After that, I did let it go for a little while longer, and in December, when it looked like clean energy was selling off, I decided to add a little bit more to the position. This time with a buy on December 6th at $21.75, which lowered my per-share cost to $22.50, another reduction of 0.66%. In the January 22 sell-off, iClean plus the rest of the clean energy sector saw a significant pullback in their prices, so I decided to add more. I made my next buy when the ETF broke through $20 on January 5th of 2022 with a buy at $19.71, which lowered my per-share cost to $21.99 after the ETF's dividends had been paid out. This is a reduction of an additional 2.27%, and since the ETF did end up selling off down here to $17.21 in February, my next price target is $17.68, where I'll add more, and then use the levels that we discussed earlier to add even additionally more as it sells off should it get that low. With climate change remaining one of the top priorities for governments worldwide, I do believe that the clean energy sector has serious long-term gains ahead of it. However, how long is up for grabs? I think this ETF could provide any long-term investor with a horizon of 5 years or more with exposure to a space that's probably going to go way up in value as we go into the future. From here, watch my other videos, check out my website, getirk.com, which is 100% free, hit like and subscribe, and I'll see you in the next video.